Most people think trading meme coins is about finding a funny picture before everyone else does. It isn't. The real game is figuring out why people are paying attention to that picture in the first place and whether that attention is growing or dying. Because a meme coin can go from practically irrelevant to millions in market capitalization simply because the internet decided collectively that something was interesting. And that's exactly what makes this market so fascinating and so dangerous. You can watch traders turn tiny positions into enormous paper gains. You can also watch the same kind of trade completely collapse when the attention disappears. So if you're new to meme coins, forget the fantasy of finding a magical coin, pressing buy, and waking up rich. Instead, let's break down how experienced traders actually think about this market, how they find narratives, what they look for before entering, and perhaps most importantly, how they avoid becoming exit liquidity for someone else's party. Because in meme coins, being early matters, but knowing why you're early matters even more. The first thing you need to understand, meme coins are fundamentally an attention market. That's the simplest way to understand them. With a traditional company, you might look at revenue, earnings, products, customers, debt, and other fundamentals. With a meme coin, the question can be dramatically different. Is anybody talking about this? And more importantly, are more people about to start talking about it? That's where narratives become powerful. Maybe a particular animal suddenly becomes popular. Maybe a celebrity does something that catches the internet's attention. Maybe a new cultural trend starts spreading across social media. Maybe an entire category of tokens suddenly becomes fashionable. The token itself doesn't necessarily create the attention. The attention creates the opportunity. And when the attention disappears, the opportunity can disappear with it. That's why you shouldn't look at a meme coin and simply ask, can this go up? Ask, what's going to make more people care about this tomorrow? That question is much more useful. Don't confuse viral with valuable. Here's where beginners get themselves into trouble. They see a coin going up and assume there must be some secret information behind it. Not necessarily. Sometimes the entire explanation is simply that the meme went viral. The original transcript gives examples of meme-based tokens exploding because of internet attention and social narratives. And we've seen this repeatedly. A meme can become culturally relevant first, then people create tokens around it, then traders start watching those tokens, then influencers and large accounts start discussing them. Then more traders notice, and suddenly you're looking at a chart that resembles a vertical elevator. The important lesson isn't buy whatever is going viral. That would be a fantastic way to donate your money to somebody else. The lesson is learn to recognize when attention is accelerating. There is a massive difference between a meme that everyone has already seen and a meme that everyone is starting to discover. The second one is where traders start paying attention. Think in narratives, not just tickers. One of the most useful skills in meme coin trading is recognizing themes. Instead of looking at hundreds of random tickers, look for what's happening across the broader internet. What are people suddenly talking about? What jokes are appearing repeatedly? What type of meme keeps showing up? What topics are attracting major accounts? What themes are traders repeatedly rotating into? That's the important part. You aren't just trading a token. You're trading the possibility that a narrative expands. Imagine one person discovers a new meme. Then 10 people notice it. Then 100, then thousands. The chart isn't necessarily moving because the underlying project suddenly became better. It's moving because the audience became larger. That's why meme coin traders spend so much time watching social media. They're not necessarily looking for investment research in the traditional sense. They're looking for signals of attention. A question that can save you from chasing. Here's a simple test. When you discover a meme coin that's already exploding, ask, am I early or am I simply watching the final act? Those are two completely different situations. If attention is still expanding, there may be room for the narrative to develop. If absolutely everyone already knows about it, you're no longer discovering the trend, you're chasing it. And chasing is where emotions take over. The chart goes up, you get excited, you buy. It goes up another few percent. Now you're convinced you're a genius. Then suddenly the people who got there before you start taking profits. And you're sitting there wondering why the internet betrayed you personally. It didn't. You were simply late. So how do you research a meme coin? This is where you move beyond social media. Finding a meme is only the beginning. The basic process is straightforward. First, identify the token, then find its contract address. From there, research the token itself rather than trusting whatever name appears on your screen. Look at the holders. Look at who is buying. Look at who has already made large moves. Look at whatever recognizable traders or large wallets are involved. And pay attention to the distribution. You want to understand what you're actually buying. Because a funny name and a cute animal don't tell you anything about who controls the supply. A popular token can still be dangerous. Popularity doesn't magically remove risk. Never blindly copy a trader. This might be one of the most important lessons in the entire video. You will see traders posting enormous gains. You might see someone turn a tiny amount into a huge position. You might see a wallet that appears to have made an unbelievable return. And your first thought might be, where do I sign up? Don't. Watching successful traders can be useful. Copying them blindly is something completely different. Instead, study their behavior. Why did they enter? Why did they notice? How quickly did they take profits? What kind of narratives do they repeatedly trade? How do they react when the market moves against them? That's how you turn somebody else's experience into your own education. Otherwise, you're basically following a GPS without checking whether it's sending you into a lake or off a cliff. Watch the rotations. Here's another concept beginners often miss. Money doesn't just enter the meme coin market. It moves around inside it. A new narrative suddenly catches fire. Traders start selling positions elsewhere to free up liquidity. That capital moves into the new opportunity. This creates an interesting dynamic. A token can have a strong community and still fall simply because attention has temporarily moved somewhere else. And another token can suddenly explode because capital and attention are rotating toward it. That's why watching the broader market matters. Don't stare at one chart for 6 hours like it's going to confess its secrets. Look at what's happening everywhere else. Social media is part of the research. If you're trading meme coins, social media isn't just entertainment. It can be part of your information flow. But there's an important distinction. You're not trying to become addicted to every notification. You're trying to understand the ecosystem. Follow knowledgeable traders. Watch what they discuss. Observe which narratives repeatedly appear. Pay attention to what starts spreading beyond the crypto community. Sometimes the strongest signal isn't one person saying, buy this. It's seeing the same idea appear independently across multiple places. That's when you know attention may be spreading. But again, don't mistake attention for certainty. Nothing is guaranteed. The internet can create opportunities and traps. Here's the ugly side of the meme coin market. Anyone can create a token. That means anyone can create something that looks exciting. And some tokens can be outright scams. So if something is suddenly trending, don't let FOMO, otherwise known as fear of missing out, turn your brain off. Check the contract. Check the token. Check the holders. Check the liquidity and trading activity available to you. Look for warnings. And most importantly, understand that you can be wrong. That sounds so obvious, yet people forget it the moment a green candle appears. Your best trade might be no trade. This is probably the hardest lesson for a beginner. You don't need to trade every interesting meme. You don't need to own something because everyone else is talking about it. And you definitely don't need to force a trade because you've been staring at charts for 3 hours and your wallet is feeling neglected. Sometimes the best decision is to wait. Be patient. That's an important realization. You don't need to catch every move. You only need to participate when you understand the setup. If you don't understand why the token is gaining attention, don't invent a reason after buying it. That's backwards. Your thesis should come before the trade. Start small and learn the process. If you're completely new, don't make your first trade a financial life decision. That's sensible. Your first objective isn't to make a fortune. It's to learn how the market behaves. Learn how quickly prices can move. Learn how narratives appear. Learn how traders react. Learn how quickly sentiment can reverse. And learn what it feels like to make a decision when the chart is moving extremely fast, because your psychology becomes part of the trade. A strategy can look fantastic when you're calm. Try following it while your position is moving against you, and suddenly your brain starts writing a completely different strategy. The real skill, pattern recognition. If you take everything from this video and reduce it to one idea, make it this. Meme coin trading is largely about recognizing patterns in attention. Ask yourself, is this narrative new? Is interest increasing? Is the meme spreading outside its original audience? Who is participating? Has the attention already peaked? Are traders rotating into this theme? And perhaps most importantly, what's the reason people would still care about this tomorrow? You don't need to predict the future perfectly. You need to develop a framework for judging what you're seeing. That's what separates researching a market from randomly clicking buttons. Meme coins can create extraordinary price movements. That's exactly why they're attractive. It's also why they're dangerous. Huge gains are possible, but huge losses are possible too. And screenshots of somebody else's successful trade don't show you every failed trade sitting behind it. So don't build your expectations around the craziest wallet you saw on social media. Build your process around what you can actually control. Your research, your position size, your decision making, your patience, and your willingness to walk away. Because the goal isn't to prove that you can turn a tiny amount into a fortune. The goal is to still have money and a functioning brain after you've learned how this market works. Meme coins aren't just about funny pictures. They're about attention, narratives, timing, psychology, liquidity, and crowd behavior. Once you understand that, the charts start looking very different. You stop asking which coin is going to pump, and you start asking a much better question. Where is attention moving next, and why? That's the mindset you want to develop. So if you're learning this market, start small, study the people who are actually trading it, research the tokens you're considering, and don't blindly copy anybody just because their P&L, also known as profit and loss, looks like it belongs in a video game. Because finding a meme is easy. Understanding why the market cares about it is the real skill.